All right, baby, we're back with another podcast for the week. Hey, Joel, let's just quickly recap what happened on Tuesday trivia, baby.
Oh, mate,
Had them arms.
my arms.
I forgot about them arms.
No, they're fine, to be honest.
Well, I know you've just got
they're
patchy
doing okay,
hair.
to be honest. Yeah, it's a bit patchy, but
Yes.
my missus didn't notice, so
Did she
we're
not?
Okay, no, she didn't actually.
Did you tell her?
Obviously, I told her,
Yeah.
and then she just forgot straight away, and she didn't even notice again after that. So maybe my arms were actually just like that hairless that it didn't actually make a difference. But
Oh, mate, that's
anyway.
brilliant. Well, I
Anyway.
retain the title, bro, for a third week.
Yeah,
you've got to come at me next week.
Yeah.
Oh, no, you're not going to be here next week. So I don't know what's going to happen about that.
Yeah, true. I'm away. I'm coming back on Wednesday.
Yeah, where are you off to this weekend?
I'm going to Dublin this weekend.
Yes, baby. Getting Irished up on the Guinness.
I'm gonna have some Guinness. Yeah, 100%.
Nice.
100%.
Yeah, enjoy.
Should be fun.
Yeah, enjoy, bro.
Yeah.
All right, what's happened this week? Where do we start? Enlighten me.
We could
What would you say?
start with, I think the most exciting currency this week has definitely been sterling. So
Yeah.
we could start there. It's been on, like you said, you did it in one of your videos the other day. It's been on a roller coaster, hasn't it?
Massive. Massive.
Not just this week, but also the end of last week. Obviously, we had BOE. Then we've had we had BOE at the end of last week.
Thursday, yep.
And then we had Boris Johnson with his hardline stance on the EU, so a big crash.
Slammed!
Beginning of the week. Then we had some solid PMI data, which had the implies that growth is above the Bank of England's forecast.
Construction PMI, wasn't it? Did we have
It was that, but it was also final services and final composite PMI.
Services is key as
revised.
well.
Yeah, exactly.
Services, for anyone that doesn't know, makes up around 70% of UK GDP. So it's a massive contributor of growth. Like, I think, as we've said, and without sounding like a broken record, I think I said this for 3 weeks running now. You know, as you can see, the pound is just not stable when it comes to, these bull runs. It's vulnerable to just being hit hard because no one wants to overcommit at the end of the day heading into, March, right?
Yeah,
March.
agreed.
I think it's the early part of March those talks are going to take place, aren't they?
Exactly. And then I think there's high risk that it could take a turn for the worse.
Literally.
Yeah.
I know. I mean, as I've said before, like the EU will want to make an example out of Britain. They're both this fight talk. Remember, we saw the MiFID. That scared people a little bit. GP, I mean, slammed. You picked that up quite quickly. It was started getting slammed like 60, 70 pips. On that headline. At the end of the day, they're going to try. Well, then whether they do it or not, they're trying to make London and the UK obviously less attractive for business, right? So that's why pound was sort of slammed on that on some worries. What else we had? What else been going on? Coronavirus. What's the update?
Yeah,
the market's getting bored.
Yes,
of it.
I agree. Or maybe they're not getting bored, but maybe they're thinking they're chilling out a little bit about it. There was that initial panic, but now it's a bit like, as we also did a video on this earlier in the week.
You did, didn't you?
Yeah, exactly. The rate at which this virus is spreading per person who's already got it appears to be coming down. So each person that's currently got the virus is basically spreading it to less people. The numbers keep going up, but the rate at which they're going up looks like it's coming down, if you know what I mean. So that might be early indication that we're actually going to level off, hopefully in a couple of weeks.
Yeah, and I mean, from my observations with the market, if we go back to, Monday, so obviously it was heavy safe haven flows, right, all of last week, okay? NZD, AUD slammed. Big flights into yen, Swissy, particularly in the FX market. There were some decent gains there because I was enjoying those. Gold eventually started to pick up, and now obviously been hit hard again. So at the start of this week, I thought all of those moves from last week, I thought Monday was just a correction, right? We saw the dollar as well creeping back up. I just thought that was all a correction. Then Tuesday, I was like, do you know what? That correction's taking place now. It's pretty much done. But then that carried on to be the case on Tuesday and Wednesday. And we still pretty much seen it today, right? Everything's still rallying pretty much.
Yeah, it is crazy. It's crazy. I mean, obviously you had the PBOC step in with massive liquidity, which is helping. That's a key thing. I think, obviously, what we were just saying, the spread possibly looks like it might be stabilising a little bit, which is another thing. But also, you've got to remember, we've had quite a lot of US data this week. Yes. And obviously the US is a big driver of overall sentiment in global markets. And the US data this week, so far, has been pretty good.
What have we had?
I say so far because obviously we're recording this a day early, so we haven't actually had NFP just yet. which we will cut to in a minute. But we've had ISM manufacturing, which was a big beat. It went back into expansionary territory.
But there's a big but here.
But it's going to be likely hit by the coronavirus next month. But that's probably going to be, hopefully, going to be
Factored
a temporary hit. And
yeah,
it'll be factored
it might be
in
priced
by
in, isn't it?
markets.
Yeah, exactly.
So that people will be expecting it to be a bit worse next month. And then on from there, they'll probably be expecting it to lift up again. And it was kind of the same story for ISM non-manufacturing, which was also, well, not as much of a beat as the manufacturing was, but it was still good. And then ADP employment. Was massive.
That's a huge beat.
291k.
That's a big boy.
Exactly.
That's a big boy. Obviously, at the end of the day, it's encouraging. I don't know the correlation over the last few months. What's it been like, ADP and NFP?
Sometimes it can be really good, like really close, and then other times it can be way off.
Just way off.
So I think in the last 6 months, 4 of those times it's been within 10k.
Okay, that's good.
But then of the 2 times it's missed, it's been like
way off.
150k out or 160k out.
Interesting to know. To know. If anyone doesn't know, ADP is conducted privately. Okay, it's conducted private payrolls number of those jobs added in the economy, whereas the NFP is conducted by the government, the BLS, the Bureau of Labour Statistics. So that's the real number you want to look out for. ADP sometimes can have an influence on the markets, but everyone's got their attention switched to NFP, right? Now, while on the subject of NFP, seeing as we are having to pre-record this a little bit early because Joe is flying off to Dublin. Way! So let's just cut to me in the future and just recap what happened with NFP. Take it away, future Ken. Hey, Joe and Ken of the past. Ken here reporting on the labour market data from the United States. So the NFP, a nice big beat, 225,000 jobs added versus the expected 165,000. So that was bullish. But the thing that let the data down was the unemployment rate ticked higher, up to 3.6% from the expected 3.5%. But the average earnings increased, which is good. The amount of people getting paid, that increased to 3.1% from the previous or expected 3%. So the data could have been really, really bullish. It's just that the unemployment rate let it down a little bit. In terms of initial reaction, it's been generally muted because it's mixed data. So yeah, we're better off seeing how everything closes and be ready to go on Sunday. But it does look like the dollar still wants to hold some decent ground, but we'll see at the close on Friday and how we're ready to open on Sunday. And just quickly as well, we saw Canadian jobs unemployment rate dropping to 5.5%, which is good versus expected 5.7, the previous 5.6. How many jobs were added? 34.5 thousand. So good there for CAD, and we saw an initial spike to the upside. So that's it from me, from Ken in the future. Guys, have a lit one. All right, so what else have we had this week then?
The other major thing was RBA. That was on Tuesday night.
Yes. I was actually, for some reason, I was up at that time at 3:30 a.m. just staring. And I just, from my initial perspective of it, they were not that dovish as they could have been, right? Obviously they were in a rate cutting cycle last year. They cut 3 times. Remember you queried me of that on the Tuesday trivia.
Yeah, I did, yeah.
They cut 3 times.
You got it.
Got it. They cut 3 times, but now they're just in a wait and see mode, right? Give us some details from that.
Yeah, I mean, a lot of people were thinking that potentially, because the coronavirus is quite a big hit, in the short term at least, but quite a big hit to the Chinese economy. Obviously, massively important trading partner for the Australians. Also, the Australians have had their own problems to deal with, the bushfires, which have been, they're thinking is going to be quite a big hit to their economy. So people were thinking, because of those 2 reasons and a bit of softness in recent data, they might have been inclined to maybe cut or sound dovish. But like you were just saying, they didn't really sound that concerned about recent data, the domestic economy, and they said that effectively the coronavirus and the bushfires would be just temporary in terms of the negative effect they would have. So you saw quite a good positive reaction in AUD on the back of that kind of more hawkishness than expected.
And let me tell you something as well. Something that the RBA that I noticed last year, and just in general, the RBA do not like a stronger Aussie dollar. Now, given the fact that Aussies was slammed and has been slammed for a little while now, I think they had a little bit of room to speak upbeat. Otherwise they would have tried to had a much more cautious tone, I believe. Because they could have been, right? They could have been with everything going on. So I think that allowed them to be a little bit more less dovish, basically.
Agreed. I think that kind of idea is going to go into RBNZ, because we've got RBNZ next week. I think they're kind of the same, aren't they? They like to have a weaker Kiwi dollar.
Indeed.
Right? And the Kiwi is very, very weak at the moment.
Oh, it's been absolutely battered. It's like,
yeah,
it's literally it's been taking a harder hit than Aussie.
Definitely.
I think over the last 2 weeks, because I was enjoying some shorts, it's dropped like around 250 pips. Like, it's big moves. Big moves there. What are we expecting from RBNZ?
Well, it's going to be a fairly boring meeting, to be honest. I mean, everybody expects them to hold rates at 1%, I believe. There's not really any pricing for a cut or a hike at all. Everyone's just expecting them to hold. In terms of recent data out of New Zealand, it's actually been quite good. I was looking at the GDP growth and CPI and retail sales, and actually, because they do all these things quarterly, and also a business confidence measure, they do all their data quarterly. In the last couple of quarters, things have actually been looking a little bit better. So, and this is despite all that NZD weakness that we were talking about. So we might be able to see a bit of room for a slightly more hawkish RBNZ next week, just like we saw with RBA.
Yeah, because the thing is as well, markets will be looking for any excuse now to produce some sort of reversal for Kiwi, right? After being heavy hit, anything just a little bit hawkish, a little bit optimistic on the economy, we're going to see that recover without a shadow of doubt. So it's going to be a good opportunity there. We just need to start wrapping up a little bit now. Quickly as well, UK GDP we've got next week, right? Yeah. So very delicate times. But the thing is, on a bad number, I don't know if it's going to well, actually, no, the markets will be looking for excuses to sell the pound. So a bad number could hurt the pound.
Could hurt the pound, but it is Q4, so it was before the general election.
True.
So people are looking for that post-election recovery. That's what people care about. Before the election, they don't really care that much about data, I think, at the moment.
Lit. Yeah. All right, guys, that is it from us. I hope you've enjoyed another round of our weekly podcast. Check out freaknetwork.io for full membership details. Let's get it.